I think dividend cuts were kind of at a low in May, and we can expect to see some of the dividend growth to resume in 2021 as the vaccine distribution gets a bit more, through the channels and gives a bit more clarity to company management.
But again, I think there's better investments in that space as well, based on valuation. It's definitely hit that point of being just probably the world's biggest hype stock now. And again, I'm not saying that Tesla is going to go bankrupt or Tesla is going to do badly. Tesla is clearly going to do well and take a large chunk of the market as the EV share continues to increase. But realistically, I think that in terms of the upside potential and also the downside risk, there's much better that you can find by looking at companies like Volkswagen or Ford or General Motors. Honestly, pretty much any other auto company.
All right, Happy New Year, everyone. Hope you guys are good and well. We are back with the most requested popular investors that you guys have been asking over and over. We have Jay Smith back in the podcast and Heloise Greeff back as well. So, guys, it's been 9 months after everything shifted already, and we're about to enter 2021, or we're already at the start of 2021. How have you guys been?
I mean, yeah, pretty roller coaster year, I think, for everyone, markets included. I mean, we've come out the other side of it, so I'm pretty happy, to be honest. I mean, for me personally, things have been kind of fine. I work from home and stuff, and trading has been really, really good for me, and I got COVID pretty good in terms of protecting against the damage. So yeah, I'm pretty happy, really. Obviously, when I look outside the window, not quite so happy, especially with the new strain that's going around the UK at the moment. But I'm hopeful, fingers crossed, that the vaccine will work against that strain. So
got it. Before I proceed to Heloise, congratulations, Jay. 104.11% gain as of the time that we're recording this right now. And you have around, I think, 28,211 copiers already. So congratulations, and to those who copied you and made money as well. So kudos. Anyways, Heloise.
Yeah, I totally echo Jay's sentiment. I think this year has been a total roller coaster. A lot of things to be happy and grateful for. I think, just making it through healthy. And for stock markets, it's obviously been a very good year if you had a good strategy. And just been able to navigate the markets this year. But yeah, still aware that there is a new strain going around and that there is still a lot of uncertainty for a lot of people, not only in the UK, but around the world. So it continues to be a bit of a strange time, and it continues to keep us on our toes, which is always a good thing.
And congratulations to you as well, 46.37% up, and then massive amount of copiers, 3,711 copiers for you also. So thank you so much for helping people as well who want to earn passively via copy trading. So I'll start with this. Maybe we can go Heloise, then Jay this time. What's your most memorable trade for the year? It doesn't matter if it's the most gains or the least number of gains, but what made it the most memorable, and then why did you do it and why?
Yeah, I think, like always for me, I don't have a single memorable trade because I take quite a conservative approach. But definitely this year, there have been a few companies which I didn't trade before, which I entered partly because I diversified my portfolio a lot more than previously, just to kind of hedge against all the risk that was there this year. So yeah, Scalar has been good, Salesforce has been good. There's a lot of them have been really good to us this year. Snowflake, Shopify has had quite a bunch of memorable, consistently good trades for me this year.
Looking at those that you mentioned, what's the one single stock that stood out for you the most there? Putting all of those together side by side.
I would have to say Shopify. I think partly because I thought that I had missed the growth that happened with Shopify, but then because of everything that happened this year and everyone going online, there was still a little bit of gain to get from there.
Got it. Jay?
Yeah, kind of echoing what Heloise said, it's really hard to pinpoint one trade. For me, like the definitive memorable moment of the year was the hardest decision I took was to cut my portfolio massively at the end of February, which is something that I've never really done before, to prepare for COVID. That was like the real memorable thing, just like closing trades regardless if they're in profit or loss, thinking, I need to make sure that I'm prepared for a downturn. If I were to like put it down to a single stock, that would be really difficult. I would say the solar sector generally, but I guess if I were to pick one, then probably Canadian solar was a good one. I picked that up in like January, February, and yeah, it's done incredibly well.
Okay, I'm curious about this. You said you closed a lot of the positions February. I can't remember the snapshot of where you were at that time, but in terms of cash versus stocks, how heavy you were in cash at that time?
So I closed around 60% of my portfolio, and I had somewhere around 90% invested at the time. So after that, I actually opened a lot of short positions as well, and diversified into, similar to Heloise, into stocks that I never really thought I would trade, things like Home Depot and Lowe's, for example. Which is not something that I would normally trade. It's not really like a exciting stock to sell wood.
Next question is this. Then can go Jay, then Heloise this time. We've been talking a lot about the markets and the US stock market going up. Given that interest rates are low, there continues to be a lot of still central bank intervention for the US markets. How do you think the markets will react for next year? Do you think the party will continue? Why or why not?
Generally speaking, I think. I hesitate to call it a party, but I think we're likely to see the bull trend continue. Actually, I think. Realistically, we as crazy as it sounds, I think we are over the worst of it now. There is like a light at the end of the tunnel regarding COVID. We have the new president in, so all of that drama's out of the way. I think there's quite a lot of reasons to be optimistic about 2021, to be honest. So I'm actually pretty bullish and pretty happy to be net long for going into 2021.
Before I go to Heloise, just a follow up on that. Do valuations are they a bit of a concern for you coming into where we are right now, or you're okay given that there's nowhere else for money to go?
Yeah, I think given that we're heading into an environment of like negative interest rates potentially in a lot of countries around the world, I think that the stock market is one of the best places that you can put your money, really. And so valuations are naturally going to go up. I also don't think that valuations are as ludicrous as people think. If you look back to like just after the major correction back in March, and you look at April, May kind of time when the markets were back up to new highs, people were saying this is totally unjustified. But then when the earnings came out, we could see that it was justified, and a lot of companies had record quarters, and that theme has generally continued in a lot of sectors. So I'm pretty happy with valuations. Obviously, it's a bit extended, but I don't think it's super unhealthy at the moment.
Got it. Heloise?
Yeah, I think again I would agree quite a lot with what Jay has said. I think of course we don't know what the vaccine will do and what the new strain will do, but definitely from the perspective of the stock market, I think we have the worst is probably over, and we can especially with our types of portfolios with long-term views, we I think value investing will be like a really good position to be in, and cyclical stocks, which are the types of ones that we tend to invest in, have strong ties to the economic growth and the current low valuations. So they should probably enjoy a larger bounce back as we see the markets and the economies recover with the low interest rates in the new years. And then I'm also a bit more optimistic that buybacks can make a return in 2021 as corporate executives, start to get a bit more clarity. I think that was one of the main themes. Jay, I don't know if you attended the Web Summit recently, but I thought that was one of the main themes with a lot of the corporate executives, that a lot of them are getting a lot more clarity about the future outlook. There's still a lot of questions about what the new normal will look like, but certainly there was a lot of positive discussions about understanding people working from home and that it's not such a bad thing as we thought. In fact, a lot of the studies show that people are actually more productive at home. What that means for our mental health is a totally different question. But yeah, a lot of companies have found that people can work from home quite productively. And so people are starting to understand what that new normal, which we may return to, will look like, although it's not that clear to all of us yet. And then I think dividend cuts were kind of at a low in May, and we can expect to see some of the dividend growth to resume in 2021 as the vaccine distribution gets a bit more through the channels and gives a bit more clarity to company management and increases the confidence for returning people to work.
Got it. And I want to chime in on that work from home comment, because I've heard it from a lot of people, especially married couples. Work from home is good for the first 3 or 4 months, but after the 5th month, they can't stand each other anymore. But I guess to each its own when it comes to how they work with husband and wives. Because some executives, like when they're in the office, they're well respected, but when they're at home, they're not as respected. They're not as respected as much. But anyways, I'm curious about this. I while you guys were talking, I was looking at your portfolios. Both of you don't have Tesla right now. What's your comment on Michael Burry shorting Tesla? And I just want your insights also on why don't you have Tesla at this at the point we're recording this video.
Yeah, so I actually made a post about that, I think maybe a year ago. I haven't had Tesla in my portfolio for maybe 4 years now, just because I feel that it's a very volatile stock and it doesn't really fit in with my strategy of a more moderate portfolio. So yeah, I haven't had it for a long time, and I don't really anticipate to include it anytime soon, just because I feel that it's too risky for my portfolio.
Got it. Jay?
Yeah, I was bullish on Tesla for a long time, but the start of this year is when I really kind of pulled back from it. So I think it was February, or maybe March was the last time that I held any Tesla. And I don't think at the current valuations I would even consider buying back into it. I actually think even if you look at some of the other companies that are kind of following Tesla, like XPeng or NIO and stocks like that, they're in similar positions now as well, or getting towards that similar position. If you look at the valuations of some of the traditional automakers, and you actually look at the technology and the products they're bringing out, I think that they're increasingly competitive. And of course, there's arguments that, Tesla is into solar and it's into batteries and things like that. But again, I think there's better investments in that space as well, based on valuation. It's definitely hit that point of being just probably the world's biggest hype stock now. And again, I'm not saying that Tesla is going to go bankrupt or Tesla's going to do badly. Tesla is clearly going to do well and take a large chunk of the market as the EV share continues to increase. But realistically, I think that in terms of the upside potential and also the downside risk, there's much better that you can find by looking at companies like Volkswagen or Ford or General Motors. Honestly, pretty much any other auto company.
You left out one company, head-to-head, Tesla, Nikola.
Neither.
Okay. Given all of the things that you said, and given also the things that you encountered this year, how would you approach 2021? Would you be more conservative or aggressive on the way you deal with your investments? Jayden, Heloise.
I think I'm probably going to be about the same, actually. I was quite aggressive in positioning through 2020. I tried to preempt the COVID move, and it did pay off. But obviously, that was a risky decision to make, and for the first few days, I was a bit concerned. But yeah, so I'm less, I'm less aggressive than that now, obviously. But in terms of, my kind of confidence in the markets, I think really I'm actually very confident. If you look at how central banks have responded, you look at how governments have responded, you look at how companies have responded to what's been going on this year, it's actually been incredibly resilient. If you compare and contrast to 2008, where you saw not only the damage to some specific sectors, and we saw that start out with tourism and airlines and things like that during this, but very rapidly spread to other sectors, and here really it has been contained to those sectors, and even there things aren't actually too bad. If you actually look, there's very few of those companies that have really struggled. I would say that the sector that's most concerning and that I'll perhaps be a bit more conservative about is things like office space, REITs, and possibly high street stores and things like that as well. I think the work from home and shop from home trends are likely to continue, and so I think that there is risk kind of fighting that trend.
Yeah, I think if 2020 has taught me anything, is not to try and predict anything, and to just, try and keep a nimble position, try and keep on top of what's happening, and try and make sure that you just stick to whatever your strategy is. Again, it comes back to being disciplined in your approach. This year, I have tried to, navigate the markets by having a more diversified portfolio. I think I took a lot more conservative position than Jay. His has obviously paid off in for this year, and that's really great. But I think for me, I'm just much slightly more conservative, and I'll continue to do that into 2021. But one of the things I think which we should look out for is those beaten down sectors which Jay were talking about, because they could really be where cash is being deployed to to build them back up, and that could really be the part of the sectors where the stocks benefit the most in the recovery going into 2021.
Got it. And what's so interesting about that, you mentioned something about diversification. I'm just so curious about this, because by the time this video will be out, the video with Yoni Askia is also out as well. I asked him how he diversifies his stocks or his assets, whatever class it may be. Then he said minimum of 10, maximum of 100. So how would you go about that? Would you buy 100 assets, so whatever it may be? Would you go as much as that?
You mean as in 100% of your portfolio into one stock?
100 different stocks, 100, or because he holds cryptocurrencies and other items, he would buy a total. He would recommend not more than 100, but up to 100 pieces of stocks. Companies.
Yeah, I think 100 is probably would be. I would be a little less than 100, because every stock you add a lot of work for you to keep monitoring and evaluating that stock. So I was probably there when we spoke last time. I think I had maybe 60 or 80 different stocks in my portfolio at the height of my diversification. It's quite a lot of work, but again, it paid off going through this year, so it was totally worth it. But yeah, having a bit more clear focus, and I like to now divide mine up according to the proportion or the percentage of my portfolio rather than the number of stocks. So maximum like 10%, or probably like if you're more diversified, 5% even into one stock as a maximum. So that's the strategy that I've been following this year.
Jay, maximum number of stocks?
I'm pretty similar. I think maybe the highest I've ever gotten to is something around 60 or 70. I think at the moment I'm at around 45. Generally, I tend to stick between like 30 and 50 or so. And I think that is kind of the sweet spot. As Heloise said, it gets really tricky to keep up with everything after that. There's a lot of work, because not only when you're investing in a stock do you need to kind of keep up on what they're doing, but you need to keep up on like the sector and the competition and stuff as well. So it's a lot of work if you're in a lot of different sectors. So generally if I'm looking really for diversification, I prefer to go down like the ETF route or something, to try and get exposure to sectors that perhaps I'm not so well versed in. But really, I prefer to kind of stick to the sectors that I know and invest in those sectors, with a lot of my capital. So that's the way I do it. In terms of maximum position sizes, I think I've been known to go over 15% a few times, but I think those are pretty rare circumstances. I have to be incredibly confident to do something like that. So I think 100 is maybe a bit crazy, but also at the same time, if you look at Yoni's portfolio, he's done pretty well over the past 5 years as well. So
anything this year, I've just reaffirmed how important it is to stick to your strategy and to be disciplined, because the stock market is very much driven by people's emotion, and if we can easily get swept away by that emotion. And this year I don't think there's anything that I would change except be more disciplined, and that we talked about when I met with you last time was one of my early learnings in the stock market. And this year has just reaffirmed that again as something which is important.